This lesson, we are going to be reviewing the strategy that I've been using for the past few years to be consistently profitable in these markets. And this is just a test, break and retest of structure in the direction of the trend, or you can also take a counter trend move with it. So we'll go over what it is, and then I will show you guys a few live examples on the TradingView chart on different time frames. So the first thing that you're going to want to need to do with this trade is determine the trend that you're in. And then you're going to be looking for the last tested area of support or resistance. Then next, you're going to wait for price to break through that support or resistance and create a new high or a new low. Then you want to wait for price to come back and retest that same area. And you're going to want to see wick exhaustion or divergence at that area of retest. Then you're going to wait for one candle to close in the direction of price, and you will be entering from there. Okay, so let's go ahead and head to the chart so I can show you guys what this looks like in real price action. Okay, and here we are on GU on the 5-minute chart, and let's determine the trend first. As you can see, we have these lower lows that are being created and lower highs. So we have price impulse correcting, continuing to the downside. So we can clearly see we are in a downtrend. Connect your 2 points to create your downtrend line. And we do have price which impulse down, stopped at that yellow bar, which is support. At that support area, we have rejection, and then price came back through and broke through our area of support. After price broke through that support, then you see a new low was formed. Now we're going to be waiting for price to come back and retest that support area as resistance. We see that price did come back up and retest that area as resistance. And let's take a closer look to see if we have wick exhaustion. As you can see here, price, when it came back up to retest this area of resistance now, we have wick exhaustion, which is just that price came all the way up to this yellow bar and then it closed below it and left that long skinny line, which is a wick. So anytime you see those long wicks above that body of the buy candle, that is letting you know that there is buyer's exhaustion at this area, which is what we want to see. After the wick exhaustion, we can see that price closed one bar in the direction of price. So here from this point, we have the retest, we have the wick exhaustion, and we have one bar close in the direction of price. The next confirmation you're going to be looking for here is divergence. We don't have a separate video on how to look at divergence because it's a very simple concept. All you need to do is go to your indicators and you're going to type in RSI. That's going to pull up your relative strength index. You do not need to change any of the numbers or features. I leave mine standard as it normally is on TradingView, and you add that to your chart. The only reason that you're using the RSI is so that you can see whether or not price action and the RSI is moving in the same direction or the opposite direction. If your RSI and your price action are doing two different things, then that lets you know there is divergence. So drawing our arrow here, matching it up with the blue arrow at the bottom, you can see that price action and the RSI are doing two opposite things. So we have divergence here. So we have all our confirmations checked off. Now let's look at when do we get out of this trade. This area here is support. You do not want price to break above that support area. So you know that your stop loss is going to be slightly above that area of support, because here with this test, break, and retest, this is a zone. It is not a direct line. This is not a singular price area. We're looking at a zone. So price needs to stay within this zone for this to still be a valid trade to get into. Once price invalidates that zone, you would want to put your stop loss there, and that is where you would exit the trade. At this point, you have your trade set up, you have your support, you have your break of that support, you have your test of resistance, you have your divergence, you have your wick exhaustion, you have one candle close in the direction of price. So this is looking like a valid trade to enter. Next, and you also understand where you want to put your stop loss at. So you can actually just go to your tools and you can use your short position tool, and you want to go ahead and place it where you're going to enter the trade. So you would click there first. The red zone is your stop loss area and the green zone is your take profit. So the first thing that you want to do is adjust the red zone to where you want to put your stop loss at. So let's go ahead and make that adjustment here. We want to place it right above that area where the trade would be invalid if it went above it. Then you want to go ahead and adjust your take profit. I always do a minimum of a 1-to-1 risk to reward ratio. You can stretch it out to a 1-to-2 or even a 1-to-3. The great thing about this tool is it does it for you. Right in the center there where it says risk/reward ratio, you can see what the risk to reward is, and you can make that adjustment to your liking. I usually put my take profit at a 1-to-1 risk to reward ratio, or I will put it to the next stopping point, which would be your next point of resistance or support. Looking at another example here on GU on the 1-hour time frame. This time we have an uptrend making higher highs and higher lows. So we have this impulse correction continuation to the upside. So we can clearly see that we are in an uptrend. Okay, and once you've confirmed the direction, you want to make sure that you go ahead and connect your points to create your trend line. Remember that 2 points validate a trend line. And we can already see here where there is a test, a break, and a retest move that happened. And we're going to go ahead and break down why this was a good entry for you to take. You can see here price tested this area right here as resistance, and then it rejected down. Price pushed back up through that resistance zone and then came back and retested it as support. Now remember, the key point is when it breaks through that it makes a new high. So we see price broke that resistance area, created a new high, then it came back and retested that resistance as now support. Taking a closer look here at where price is retesting the support area, we are looking for wick exhaustion and we're looking for one candle to close in the direction of price. And we see that we do have a seller candle with wick exhaustion here at the bottom, that gray candle, and right next to it we have another candle which closed in the direction of price. So we do have that here. And next, we're going to be looking for divergence. Remember, divergence is an indicator of a reversal. So when there is divergence, that is an indicator to let us know that there is a reversal coming. That's why we are also looking for divergence as another confirmation. So wick exhaustion lets us know there's a reversal. A candle closing in the direction of price lets us know that there's a reversal, and divergence also lets us know that. So we put our RSI up here, and as you can see, price action is going up while the RSI is going down. They are doing two opposite things. So that lets us know that there is also a reversal coming. So that's just an additional confirmation. All you're looking for is confirmations to indicate whether price will respect this area of support and go in the opposite direction. All right, and here's an example of this strategy on the 4-hour time frame. So we do have an uptrend here. Clearly, we can see higher highs and higher lows being formed. And you can go ahead and connect your points to show that this is an uptrend. All right, and then we do see a move here of this test, break, and retest. So price tested this resistance, rejected down off of that resistance, and price came back up, broke through that resistance area, came back. Once it broke through, it created that new high, remember. Then price comes back down, and it tests that same resistance area as support now. So once we get that retest of support, we want to take a closer look at how those candles are forming, because we want to see wick exhaustion and we want to see a candle close in the direction of price. And we do have that here. And looking to see if we have divergence now on this 4-hour time frame. And as you can see, the RSI and price action is moving in the same direction. So we do not have the confirmation of divergence for this entry, but we still have the new high that was formed. wick exhaustion, and a candle close in the direction of price. So this is still a valid trade to get in for this buy. And now remember, we can use our long position tool for us to go ahead and see where we want to put our risk to reward ratio. So remember that stop loss is going to go below the zone that we want respected. And then we want our take profit. That is up to your preference. You can either do a 1-to-1 ratio at minimum. Anything above that is your choice. You could do it to the next stopping point or the next area of resistance, or you could do a 1-to-2 or a 1-to-3, a 1-to-5. That is completely up to you.